All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for June 9th, 2023. This is Friday night weekend edition. So we'll start with the swing trade portfolio, Alcoa. This is all 30-minute charts. Yesterday's 1, 2, 3 entry, which looked promising, started to fail. So we just took that as a scratch. No overnight risk. Excuse me. AI got a large gap up, ran all the way to the top here, and then started to fail. So we cashed +1, stalking that for next week. Remains a long-term interest. Caterpillar, we had a 2-position long on that one, and it started to fail with a supported fall crossing, lower highs. Was getting ready to test a collapsing dragon, which it did. Took this exit. I probably should have re-entered here, but we'll just give it the weekend to calm down. That's a good trade for about 1, 2, 3, 4. That's about 5R. Cliff also. This was the 4th day. This was the day it should have made hay, but it just kind of began to fail. So we happily captured 1, 2, 3, 4, 5, +5, and no overnight or over the weekend risk. Like that one. Chevron, yesterday we initiated the COTA 2. It's holding about +1. It just kind of went sideways today at mark time. Still like it. Dish Networks, this one, I should have had a better move on this one. So Dish is one of the companies that's, it's like the smallest market capitalization in the S&P 500 is going to fall out of it in a couple days. So that means it's not going to get any institutional buying from S&P 500 index funds. So this thing is really suffering for that reason, and today was a great big down move, and that's about 3R after this gap down and collapsing dragon. This could very easily get back to $6 before it fades altogether. So they're just getting murdered. Devon Energy, no trade. Electronic Arts, yesterday's 1, 2, 3 short, which closed here. Then sold off harshly and gave me a 1, 2, 3 exit at the edge of the dragon. And I was happy to take one about +2 on that one. I missed the rollover, but I think there's this is like a double collapsing dragon next week. So there's every reason to believe that if it goes below 126 next week, that's going to be a good short. So we'll keep our eye on that one. Emerging markets, the SSC from yesterday closed well. We're up about +1. Ethereum getting murdered. EWW, a 2-day trade for about 4R off the COTA 2. I think this has legs for next week because we have cleared the previous support levels, and this thing is all up. But, I just like to reduce the risk at +4, and then I know how to re-enter, so let's see how that goes next week. Brazil, same thing. That was +3. It's essentially the same trade. Not quite as good as Mexico, but I'm really happy with that one, and we'll re-enter it on Monday if needed. Intel, the COTA 2 or SSC, if this is more like an SS or a Z3 pinch, sorry. It's had that 3-day really tight. So we tried that one like on a COTA 2. It started well yesterday, but today just started petering out, and I decided to scratch that one. It recovered pretty nicely, but we can re-enter that one next week. I think it's still digesting that nice run-up. International paper, no trade. Real estate, no trade. KRE. So yesterday's long failed at the open, so took a half an hour loss. Took the revenge trade for about 0.3, so this is about minus 0.2. I'll be ready for more on the downside next Monday. McDonald's, 2 days into the SSC and feeling pretty good about 4R. Merck, same trade, only this one I decided to cash in the last 30 minutes because it was wobbling here, had rolled over, and then it started that sell-off in the last 30 minutes, so I just decided to keep McDonald's long and just pull 4 out of Merck and be done with it, reducing some of that over the weekend risk. Microsoft, on the other hand, I kept it. I'm troubled by a belief in these guys. I used to hate these guys for decades. That hatred has been replaced with hatred for Apple and Facebook. But I think the correct play was at that peak, which is halfway up the stack, and it starts failing. I think I should have been out here, and then if I still wanted to own it, probably rebuy it there. But I allowed my beliefs to get in the way, and I get a sloppy holding +1 in Microsoft. Not really happy with that one. So it'll probably crush next week. This is marijuana, and this just had some extraordinary volatility in here. Yesterday it calmed down and started to fail, so we got the short in, and it closed here. And then today it never really collapsed like I expected. And when it finally started to get back to the PSAR, that was enough. So we took up about plus 0.5 out of that one. And this support level here feels like it's significant. This may be finding a bottom. NVIDIA. Now this is the correct way to play this. It closed here, then there was a big gap up, and then runs all the way up and then starts failing. That's proper. That's +2 and have peace of mind and a professional feeling. So that was better. That's what I should have done with Microsoft. Clean energy, yesterday's COTA 2 entry failed. I took the scratch. Rivian, missed the short completely on this one. The S&P, it gave the first hint of a continuation of this, of the gain that we got here, and then stabilized brutally for 4 days, and then gave a little teaser. Today it ran up and then just kind of monkeyed around. So I think that was just some tactical traders that could only push it that far, but were content to just bank all of those gains and to take it up again on Monday. So that sort of informed my whole opinion today about what to do. Treasuries, I yesterday took the gain here. I missed the morning hook. That was the same move as this one, and I just span of control missed it. Let's see. We have Tesla's COTA 2 emerging dragon from yesterday also ran up, and this is another one that I'm just I've got a bias to the long side on, and but it was been so good, and today this was the best performer. I think that's going to have some carryover effect. Good chance of that for a big gap on Monday. I would not be surprised to see that. So we're holding 4R on a single position, so I have a little room to protect myself against my instincts. And then finally, this was U.S. Steel, and the COTA 2 yesterday that I held my nose rolled over. By the time I got out of it, I took the full R loss on a small it was a small risk box, but that's still a full R. And then I just missed the continuation to the downside. So got a little sloppy on that one too. But overall, pretty good week. And Dish Network, I think, is the big going to get crushed next week. And I still like AI and Tesla on the long side. All right, let's look at the sniper trade of the day. So this is in Brazil. This is on 3 minutes. So here's how it closed yesterday. Today it gapped up. There was your OR3. The second bar started to fail. It immediately reversed. So I took about minus 1R-ish in the usual way. Stopped and reversed. 2R battle drill, add the second position. 4R battle drill, add the third position. And then it gave this explosive move and then pulled back an entire R. And that's on 3 positions now. So when you give back one risk box on 3 positions, that's minus 3. So at the peak, this thing was plus 12. So I was able to keep 9 out of 12, or about 75% of the maximum favorable excursion. And that feels correct. So, yeah, you get 1, 2, 3, 4, 5 on the first one. 1, 2, 3 on the second one. And 1 on the third one net. So that's where you get the 9. So that puts us at plus 8 for the moment. Now notice that exit coincides with the MACD just starting to roll over, but because there's 3 positions on that thing, you have to be quicker than the MACD on that one. Now, if I'd only had 1 position at the maximum favorable, I was plus 6, and then if I'd gotten out there, I would have kept 5 out of 6, which would have been an 85% capture of maximum profit. But I'd rather have 9 out of 12, even though the capture rate is a little less. I still like the absolute capture better. So there we are. Decide what you want, efficiency or effectiveness. So I take the short because that was such a big run up. Take the short. It's failure to fail. Grinding. The PSAR times me out, so that's a scratch. Stop and reverse. That's a scratch. And that's enough for the day. So, go into the tote board. 1 win, 2 scratches, 1 losses is my precious, and that's 8R. So that's a 25% win rate. The number of wins equals the number of losses, but the payoff ratio is pretty good. You know, it's a 9-to-1 payoff ratio, so you'll take that. You know, so I would say the correct way to do this, though, instead of just calling that 1 win for 9, I should have said this is 1 win for 5, 1 win for 3, and then 1 win for 1. And so I think technically that should have been, 3 wins, 2 scratches, and 1 loss. So, it looks more dramatic this way, though. So 3-minute charts, simple control measures. This is standard work for a target in a critical state that is ready to move. Remember, that's what this looks like. And if we looked at the daily report, we saw that it was one of the exceptional relative strength winners. And so the gap up tells us it's in play, and then you just follow the signal. You don't have to be right. You just can't stay wrong too long. Like if you don't take that exit because you believe in this, then you just get smashed. All right, let's go to the traders. Where are you at, boys? Okay, traders doing some good work today. Here's Constantine with his standard play. There was the high from 2 days ago, the rollover, a risk box off the top, gets the short position, covers on a 1, 2, 3, and it's also the origin of the move. That was the move up. That's the return to the station. 3.5 more. Standard work. Tim. Intel, he's found a mover. There's like a OR3, there's a gap up and a rollover, breaks through the PSAR, so he's short, catches it at the edge of the dragon, and he quickly got to no lose and then accelerated and caught it as it crossed the PSAR. So that's like a fake one go-to pattern that he notices. Then he takes the collapsing dragon short, standard risk, manages it all the way down. 1, 2, 3, exit at the edge of the dragon for 2.2, and family obligations. So 3.2, very nice. Felt very smooth all the way through. 0.6 on Microsoft. Gets the like the OR3 cash. He missed the re-entry because of span of control, so he just waited and stayed calm, took a quick loss, and then recovered that on the second entry short. Look how good that stop and reverse was for +1, which covers this. So 0.6 on Microsoft, nicely done. Wheaton Precious Metals, that's our proxy for all the precious metals. Gets a OR3 risk box, short 1, 2, 3, catches it as it crosses the VWAP and hits the dragon. That's pretty good shooting, Tex. I like the patience on the Kata 2. Standard risk. Nice exit. Nice short effort, quickly cut. 2.3. 6.2 for the day. Good job. Let's see. Hamad. So this is also in Brazil. He plays this one, takes a quick loss, but a perfect re-entry at a new high of the day, standard risk. Crushes it. Now, if he'd had the second and third positions in, then you've got to get out inside that bar, which was pushing the boundaries of Z3 and then collapsed in that same bar and then started off failing. So with you had more than one position on, you got to be more aggressive. But with one position, that's really good work. I like the short here. Maybe a half step slow getting out, but still 2.7, and was able to stay out of the chop because the move of the day is occurring in here, and it's a Friday. Nice. So timing, much better. AMD, Advanced Micro, in the self-coaching. Pay attention to fewer symbols and trade the entire value chain. Took some single trades on a few symbols, but didn't trade the entire chain. So we still get paid. Quick scratch, there was an opportunity, but he just nails it on the recovery and then the re-entry and does 1.5. I like that. Uh, 1.1 on Microsoft here. Yeah, the same reentry you had on the other one. Now that's probably a span of control, and EWZ paid for everything. This one, I don't know if you were in shock from seeing that one get away, but that was a tradable move. And then the reentry here, that's nice. That's nice. This is a good shot. Maybe we can get out of it in the middle of the dragon rather than here. I like that short. I think you can... we took the micro loss and got in, maybe a second position, as you note, and then that covers everything. 1.1 for the day. Really nice work. Feels like you're getting a little calmer behind the wheel. I like that. It's looking pretty good. All right, that's that. Let's go to the reports. Okay, so this is the weekend report. So we start with the once a week view. For tomorrow's date. This is still crushing. Those holdings are smashing. Still at 80% exposure in ETF2. The nice turnaround. This has really been good to the long side, as we know. RLF daily. Essentially, what I look at on this one is I'm looking to see that the RL10 is still pushing high. The RL30 is looking good. That's sort of like almost a Kata 2 in the RL30, which is the health of the market. The RL90 is this one. Boy, that's as strong as you can want. That RL90, double plus good. And everything is pulling the RL270, which bottomed out in here. That means this is where it was supposed to fail if it was going to fail. It didn't. It gives you this. And all that is really good. And now so the 270, the 90, the 30, and the 10 have all conspired to pull away. And now if we look at this, the peak of the RL10 to the 270, that's how much more aggressive the traders are than the buy and holders. There was a time back here when they were very close in their opinion, and here in their opinion. And here they both agreed what the fair value was, as they did here. And then the last time there was a significant difference of opinion, it was here and here. So this is what that bottoming and reversal action looks like. Look how long it took to take that. That's September to, I would say, February. That's September, October, November, December. That's a 6-month bottoming process right there. And this is really a very favorable condition by all the holders. And now you can see that we've, the dragon, which has been oscillating around the zero line, here it did not fail. It's now through the Red River and going. So let's see how much we got. The 3-day look, so hat tip to my brother and Trader X. This is really healthy. And when we draw the geometry, we're coming to a really important moment next week. Can the momentum of this grind, and that's really been a grind, can it break through the structure of resistance right here in order to get to this one, in order to get back to the all-time high around 470? So this is really an important moment next week to see if this week's momentum can carry it through this significant short. So what's that mean? To me, that means you got to have your stop above the peaks, because if this fails, then the argument is that it's back into this channel. So all you need to see is a failure at this price level at 420, which is about 2%. You can't stay longer than that, just given this structured setup. Check or hold. So 420 is really important. Now on this one, on the 9-day, look how strong that signal has been in the past 4 years. And it is slowly, gathering steam. This is where it went into the summer. So if we can draw that little rascal that way, that is an accelerating strength. And the yellow bar, when it went from the winter, was just kind of in here like this. So we're feeling, you should be able to feel the improvement inside that. And if we look at this is where the winter began, so we had a fall that looked like this. And the winter looks like that. So in that perspective, this has really been strong. And then that PSAR flip, which happened right here, has really been pointing the way up. So 470, that's the opportunity until it becomes an issue. If we're going to get there, it's probably going to take 18 months, 20 more bars. 20 bars times 9 days is 180 days, I guess, and trading days. That's through the end of the year. So we'll see. But there was some white knuckling right around in here, but the PSAR did not lie. Trust the PSAR. And the fact that this is accelerating is a solid long-term indicator. Okay. Looking at our 150-day feedback, we can see, just from a structure point of view, right? So here's the 10-day low. Here is the last R10 reversal that was lower than the previous one. That's sort of the bottom peak. And then everything after that is higher lows in the R10. So that's all goodness. So that means this as a pivot point is crucial. And what I want you to notice, the reason the K2 is so strong is these little spots here, every one of those was a hesitation which could have failed and gone through that key price level, but it didn't. Right? So the point is, this is a significant support level, which at 407.5 is the base of the PSAR flip. That's where the PSAR flipped, and it's been good ever since then, right? So that was a really important signal. That also coincides with a breakout above the R10 and the PSAR flip there. That's why the PSAR flip matters so much. That's why this is the risk box. So other places, that's the 30-day low. This I just added because it's a round number at 400 as a fat round number target. This one at 390-ish is the belly of the dragon. So when this came down and reversed, which is the last time the dragon made a low, it's at 390, and then this is the peak of the R10. That's at 385. And then the same thing, the belly of the dragon, belly of the RL10. So those two create like a support region, and that's kind of crucial. I would also just observe, this peak right here turned out to be at 415. That channel, when that gets violated right here on that PSAR flip, that's the release of tension. That is the signal that there's new money coming in, and it's not just the same old guys bouncing around in this channel. And my brother would point out that we're right at a 2-hour battle drill off that wrist box. So this is the place where there's a good chance for this to accelerate and go because you've cleared the previous humps. So the 30-day is this black. Now we're zooming in a little bit more. So this black box represents the 30-day, and that's why this peak that I said before, that lower peak or trough, I guess, that was crucial. That PSAR flip. It took this much time for the PSAR to flip. So, but notice that is the same price. It has to be mathematically that those two lower points are connected to a very important support level. So I said we don't want to let it get back below this peak of the R10. I mean, you could make the argument that you want to be at the PSAR dot or the lower skin or the spine or the 5-day low or whatever. But really, for the longer term guy, that's the crucial one. You cannot let it go below 420. So if you want to give it that much room, you're okay. Or some subset of that, but you cannot let it go below 420. We've had now this is the 30-minute. We've had 4 days of chop. This was a bit of a run up, but it held above that crucial. That's a very healthy sign. This green line here is what that on the daily chart was, that statistical peak of the daily RL10. So now you know. Blended monthly rebalancings. Qs have had a great month. We're basically flat for the week. Latin America, that's Brazil and Mexico, are doing really well. We finally saw the beginnings of a recovery here in small caps and mid caps in the U.S. to start chewing away at the underperformance to move them up. For them to move up in the stack, it has to start with the 1 week and the 1 month relative outperformance. So we've seen that. That could be where the strength in the U.S. is coming from. In the ETF 22, we add the XL series. So K and tech and discretionary doing well. The cyclics, the materials, energy, and finance, all getting, they have been underperforming a lot, but they weren't bad this week and month, energy and finance. So this is a recovery from the banking crisis. So there's probably still some value in that one. ETF 32, we add some countries and some narrower indexes. There's your Brazil. That's pretty good stuff right there. It's now into positive territory here on the 6-month. That's good. Emerging markets is stubbornly trying to get it done, a little better than the Dow. So that's healthy. And again, the nice moves in the mid caps and the small caps, that's all good. Individual companies. These are the guys that have had the best leadership for the month. Boeing is the one that held up this week pretty well. Microsoft, Apple, and Intel all took a breather this week. Still pretty good shape for the 1 month, 3 month, and 6 month. IBM, Caterpillar. Boy, I'm just glad we got that one. That's what happens when you just follow the price and you don't make assumptions. Caterpillar has been a big payoff for us the last 2 weeks. Of course, I missed American Express and IBM, but what do you want? Let me look at the bottom feeders here. So these are the top 30, based on the blended percentage. These are the bottom 10. And look at the recovery off of the bottoms. So that reinforces my point that from extreme conditions come extreme results. These are things that are all getting slaughtered. But dead cat bounces or catfish moves, look at the size of those moves. So in a portfolio that's composed of, exceptional performers and exceptional laggards, and then that fat middle, if you just look among the leaders and the laggards, you're either going to get great continuation or harsh sell-off to preserve profit, or absolutely murderous continuation to the downside, or a recovery as people buy value temporarily. That's why you want to look at the extreme conditions. From extreme conditions come extreme results. That little snapshot right there should really persuade you of that idea. That's so good that I'm going to make a short video out of that. That's how good that is. I mean, regional banks are down 32% over the last 6 months. Oh, yeah, but they were up 17% for the month and 6% for... So how long are you going to let the news keep you out of them? You've got to be able to trade price as it responds much faster than news. Because the newspapers all got to be right. They don't want to call it until it's absolutely clear of what's happening, which may have been the end of the move. So you must be able to act with confidence during moments of uncertainty. The S&P and tech are doing really well. The value plays are suffering a little bit. Mexico and Brazil are tearing it up. You got real strength here in the Qs. Look at it, 91. It's the number one position. And tech in the S&P is absolutely crushing it. Nobody else even close. And all of the other asset classes getting slaughtered. So in the middle of a bear transitioning to bull, it was stocks. All the defensive plays, that's just a diversification trap. Here are the 3 new additions to the green and white, which is this one. Was good, now great. Discretionary, South Korea and biotech, as is Brazil, as is Latin America, as is the S&P. That is very favorable. Very favorable. Let's go right to the daily dashboard. You've seen most of that already. Still very healthy. Back into bearish quiet. Volatility is very favorable for the risk-on trade, and it's reflected in the strength compared to the 200-day moving average, and the ADX for intermediate strength is strong. All that's good. Look at the things closest to their 10-day high. Walmart, Johnson & Johnson, Goldman Sachs, Dow Jones Industrials. That tells you what you need to know there. This is Main Street coming back. Tesla crushing it quietly. Nobody's talking about how much money Elon's losing now. He just recovered 30% of his fortune in the last 30 days, but nobody wants to say anything about that. But let his stock go down 1%. Don't bet against him. You might trade against him temporarily because of his size, but don't bet against him. Diamonds had a nice breakout. Brazil and Mexico were strong. Latin America, no surprise. S&P, 6-month high breakout. 10-day, 1 month, 3 month, 6-month breakouts. That's double plus good. Discretionary, that gets a lot of strength from Amazon, Tesla, and Home Depot. Those are like 30% of the value of XLY are in those three. And they're all crushing it. Very few in the auto framer. Handful of squeezes, including diamonds. That's actually very good. That means it's poised for more upside. Not many Godzillas in the tactical set or in the ETFs. There's still a handful here in S&P 500, including Target, who's just getting murdered in the LGBTQ wars. They can't win. Standard work here. The real outperformers, NVIDIA, and then underperforming in our little favored cluster, Texas Instruments, Intel, Alcoa, Cliff, and U.S. Steel. All the metals were down big, so that means we're ready for them to turn the corner and start looking for that kind of SSC action in the 30-minute hybrid. So let's be ready for that. This is pretty strong spring and summer. This is a shift into some favorable territory. That's pretty good stuff. Clear leaders, Walmart and Tesla. That's like the two most important companies in America. Tesla for innovation, Walmart for value creation and efficient low prices. The S&P and diamonds, strong. Brazil and Mexico, but we know that. That's good. That's all you need to know. Trading value, our top 10s. Marijuana, clean energy, Devon, Tesla remains strong. Intel. Home Depot quietly getting it done. Look at that. that's everything I want to cover. This is looking really good, guys. Today was the little pause that refreshes. This will be very interesting on Monday and Tuesday. Can it keep finding its legs? It's trying hard to quietly break out of this. Even the Wall Street Journal is scratching his head. How can we be in a bull market when all this stuff is going on? Because they don't pay attention. All right, guys, that's everything we got for today. We'll hit it tomorrow morning for the storytellers in the usual time. I'm back hosting now that soccer camps are over, and no live podcast tomorrow night. If you can get your charts posted early, we got a soccer match in the evening, so I'll try to get all that stuff done, and then the usual Sunday morning creativity and foundations Q&As and check-ins. Guys, those things are gold. Those two courses are gold. If you have not taken them, you really should. It's really worth your time to do the work in that setting. That's all I can tell you. The other good news, the book is at the editor for final editing, coming up with the cover and the title, and it'll be published sooner rather than later. I'm really proud of that work. The co-authors were very patient with me, and their contributions helped inspire me to do good work. Really proud of that book. It'll be on the documenting the foundations of our trading community of practice. You can look for that. There will be a coupon that comes with that book for discounts at workshops, because we want to be able to celebrate. And that's everything I got for you today. Take good care.